Good morning. It's Tuesday, the 16th of September, and this is Govindraj Ethiraj broadcasting and streaming weekdays from Mumbai, India's financial capital, once again totally rained out. And our top stories and themes. Run it hot, the Wall Street theme that's playing out in India too. Gold prices hit fresh highs. How much further could they go? What happens if India opens its market to American premium cheese? And how enterprises from shoes to beer and tires are using artificial intelligence at work.
This is the Core Report with Govindraj Ethiraj.
Running it hot. So the coolest trade on Wall Street is apparently called Run It Hot. While economists are focused on slowing job growth and the impact of tariffs, the core of the trade lies in betting on an economic resurgence, not a recession, according to the Wall Street Journal. Bob Elliott, the CEO of Unlimited Funds, who popularized the term Run It Hot, told the Wall Street Journal that the core of the Run It Hot trade is the idea that US economic conditions are going to be very strong, supported by easy monetary and fiscal policy. So the thinking is that tax cuts and falling interest rates will heat up the economy, fueling a new burst of growth. So therefore, focus on falling interest rates and ignore everything else because interest rates alone will solve all problems, at least low interest rates, and at least that's how traders appear to be thinking on Wall Street. And by the way, lower interest rates also help corporate bottom lines, so another reason to buy up the stocks. An active asset manager at AllianceBernstein also told Wall Street Journal that we've got an economy that's still growing. It's not falling off the cliff. And he thinks it's actually a pretty good environment for risk assets if only the central bank can start cutting rates. So the background is, the Dow Jones, S&P 500 and NASDAQ Composite are all at record highs, led, of course, mostly by technology stocks. Now, there are some skeptics as well, even if in an apparent minority. A chief strategist at JP Morgan Asset Management says that he sees evidence of a gradually slowing economy that he expects will weigh on cyclical industries such as manufacturing or retail. And he also said that he felt the stock markets were misinterpreting the state of affairs if they think that a rate cut here is going to do any good at all to the overall direction of the economy and profitability. And then, of course, the AI boom means that some investors expect a strong economy to coexist with a weaker labor market, something that was once hard to imagine in America's consumer-driven economy, according to the Wall Street Journal. Now, back home, the Indian market snapped long rallies that lasted several days. And of course, the jury is still out on whether we are also running it hot. The 30 stock Sensex snapped a 5-day winning run after closing 119 points down at 81,786, and the Nifty 50 snapped an 8-day run, falling 45 points down to 25,069. The rupee was flat on Monday thanks to a boost from a largely weaker dollar and persistent hedging demand from importers and not much, or rather lackluster foreign portfolio flows, according to Reuters, which added that the rupee closed at 88 rupees 21 paise against the dollar, slightly stronger than its previous close of 88 rupees 27 paise. India's merchandise trade deficit narrowed in August to $26.49 billion from $27.35 billion in July as exports slowed after import tariffs were increased on Indian goods into the United States. The latest news, of course, is that India and the US are slated to hold trade negotiations on Tuesday in Delhi. That's today, which means there could be a thaw. But then since you and I are all veterans in this game, it's best to wait and watch. Meanwhile, Trump's tariffs are estimated to have cost Andhra Pradesh approximately 25,000 crores in shrimp exports, with government officials saying about 50% orders have been cancelled. Andhra Pradesh accounts for nearly 80% of the country's shrimp exports, and Indian Express reports said, adding that with nearly 600 crores in tariff burdens now falling on about 2,000 containers, Chief Minister Chandrababu Naidu has sought the centre's intervention to help shrimp farmers because of this export crisis. Tariffs are now at almost 60% after Trump announced those 25% additional tariffs above the 25% announced earlier, as well as a roughly 5.75% countervailing duty and about 4% anti-dumping duty. Speaking of Trump, I wonder how this could go in Indian markets, since people have been talking about it for a while, and we'll have more reactions in a day or two. Trump on Monday said that there should be a change in corporate reporting requirements, suggesting that companies and corporations should report financial results on a 6-monthly basis rather than quarterly. In a post on his social media platform Truth Social, he said the move, subject to approval by the Securities and Exchange Commission, the US equivalent of the Securities and Exchange Board of India, would save companies money and allow managers to focus on running their businesses effectively. So, whatever else you may think about Trump, this is something that a lot of CEOs would surely welcome anywhere in the world. And here's a message from a sponsor. Want smarter investing at your fingertips? With InvestingPro, get real-time market data, custom alerts, and global financial insights all in one place. Join 46 million users already making sharper decisions. Download InvestingPro today. More details in the link below. And then there's gold. Gold prices are around $3,644 per ounce after hitting a record of $3,673 on Tuesday. Gold prices have crossed a record peak of 110,000 rupees per 10 grams last week and are now up 42% year to date after gaining about 21% in 2024. So the general expectation is that retail demand is going to slow down. The CEO of PN Gadgil & Sons told Reuters at the sidelines of the India Gold Conference in Delhi that consumers have fixed budgets and it's not keeping up with rising prices, and they're expecting demand to fall by 10 to 15% in volume. This is, of course, festival season, during which buying gold is considered auspicious, particularly Dussehra and Diwali, which is in October. The December quarter typically accounts for about 1/3 of India's total gold sales. And like we said, it coincides with festivals and also the start of the wedding season. Reuters says gold demand in the December quarter last year was at about 265 tons. And last year, India had also reduced import duties on gold from 15 to 6%. To get a sense on how things look from an India point of view, I reached out to Ajay Kedia, commodity and metals expert of Kedia Advisory, and I began by asking him how he was seeing the market at these record highs.
First of all, definitely in last 1 year, we have seen a very tremendous rally, what we have never seen in last 25, 30 years. That is more than 50% rally on domestic side, thanks to rupee weakness also. I still feel that fundamentals are very much sound. We have seen geopolitical tension going on, interest rate, or we can say central banks continues to buy ETFs. All these factors have contributed this rally. But definitely after a 50% of YOY rally, slightly I will be more cautious at this moment because equities are cheaper or other asset class might be slightly cheaper as compared to gold. So risk is slightly on gold.
Okay. And how are you seeing the impact of this on demand, particularly in the festive season in India?
India is a, we can say, price sensitive market. No doubt, gold as a ritual, we have to buy. Let it be Akshaya Tritiya, Dhanteras or marriages. So yes, it would be impacting. But see, I think the value-wise, things would be improving on the jeweler end. But from the volume-wise, that will be dropped. Secondly, I have met with many jewelers, found that old gold are coming in the market. So definitely the volume size, or we can say the purchase, generally people buy, let's say 20 grams, so that could be subsidized to 10, 12 grams. Even government is focusing, or jeweler is focusing on lower carat gold like 18, 16 and below also, but volumes has to come down.
Okay. At this point of time, if you were to try and project where prices could go, would you be looking mostly at international factors? And if within international, is there any one or two specific things apart from interest rates?
There are many factors. Since last 4 5 years, we have seen geopolitical, but now geopolitically, I think it's a verge on completion. Like Russia, Ukraine was continuously since last 1,000 days, but now US is trying to push down by saying from Europe, okay, put 100% of tariff on India and China. So I think in next couple of months or 3 months, at least we can see a partial ceasefire. That will be a big blow. Secondly, central bank. Up till now, central bank was one of the biggest buyer in last 25 years. But I think current rate and current risk appetite has been slightly subsidized. So I think other than interest rate, there would be a central bank buying or ETF also, because one have already got a return of 50% and more. So I think ETF, outflow, central bank buying, and geopolitically, these 3 points should be the important for next few rallies.
When you look at asset classes, now, usually, while people may have had some amount of gold in their portfolio, it may not have been that much. So, do you see that having increased? I mean, people having switched out from other assets to gold in the last few months or year?
Few months would be very short period, but yes, in last couple of years, we have found that family offices and financial player, when they have stuck in the equity market, has moved towards gold and silver, especially in case of gold, because of this all factors what we have discussed. That has moved up till now in last couple of years. Even ETF has been launched in India. we have seen a tremendous boost in ETFs also. That clearly shows.
Right. And as you look ahead, Ajay, in the next, let's say, 3 to 6 months, what are the factors you feel are going to drive prices and what's your outlook?
So coming on the outlook, frankly, I was very much bullish. We were targeting at least 3100 last Diwali, and we have achieved not 31, 3700. But frankly, for next 3 to 6 months, I am expecting either consolidation or a fall, because generally we see gold doesn't comes with a percentage fall. Gold generally we say have a time correction. So it's a time correction we are looking for next 3 to 6 month period, or a correction of 8 to 10% would be viable. Already we have seen in from 3500 to 3100. Current level demand would be impacting very much. And what are the factors up till now we have seen are now mature. So I am expecting a correction or a time correction in next 3 to 6 months.
Right. Ajay, it's been a pleasure speaking with you. Thank you so much for joining me.
Thank you.
All about cheese. A US trade official told a newspaper that Washington was mainly interested in exporting premium cheese to India and has little intention of competing in the mass market milk segment, obviously a sensitive area. The official told Business Standard newspaper that it does not make sense to export milk or yogurt to India. We're talking about high-end products like certain cheese varieties, which may be what 2 to 5% of people will consume. Now, whether or not we actually import cheese or more of it or not, the statements have some additional relevance given that trade talks with the US are resuming and most likely today. According to that Business Standard report, India already imports small quantities of premium cheese like grated or powdered cheese, processed cheese, not grated, blue veined cheese, and artisanal cheese, all of which have duties about 30 to 40%, including from countries like Lithuania, UK, that's the United Kingdom, and Italy. But then there is, of course, a larger point in this. It's not the amount of cheese that matters, but it's about the direction that we are setting in our trade talks. So to understand what premium cheese means specifically, but more importantly, from a trade point of view, an opportunity for the Indian market, I reached out to Rajiv Mitra, former CEO of Lactalis Group in India, and now senior advisor to Indapur Dairy and Milk based out of Pune. And I began by asking him to walk us through how he was seeing the market.
I have seen the reports. While I have not seen any official communication from the government, I see it as a very good midway, as a very good way to move forward in the current kind of stalemate that we have. We are talking of premium cheese, which India is not making in mass. So we are giving access to US to a market where India is not participating. At the same time, we are not compromising on our stance of protecting the mass dairy market. You would see that the report says that US is not interested, very rightly so, and this is what we talked about in the earlier episode that I did with you. They are not interested in our mass milk and yogurt markets. So this is super premium cheese. But the caution here is, how do we define premium cheese? Is it brie or camembert or gouda or emmental or aged cheddar? Is that because my word of caution stems out of the fact that paneer is also cheese. So that listing has to be very carefully done, which I have not seen yet.
Right. Now, we are already importing cheese, and it's only, a few $1 million right now, and we're importing it from many countries. So, what would change then between, let's say, us importing it already versus allowing it to be imported from the US if it's not happening already?
No, there are a couple of things. One is whatever imports are happening in cheese, very, very small quantities, maybe some personal, not that much of institutional initiative. This becomes institutionalized. One. Two, I see it as a very good communication strategy that yes, I am opening it up for you. So there has to be a kind of give and take. While internally we know that we are not opening up the mass dairy, we are not opening up milk and curd and paneer and other daily consumption. So our farmers are protected. And also, I see it, Govind, as a very good model for phased liberalization of the industry, because opening up will happen, in my mind, maybe 10 years down the line or sometime in the future. So this could be a phased model of opening up, that we open up a little bit, maybe 2% today, 5% tomorrow, 10 day after. And that's how we bring competitiveness and improve our internal industry.
And why has India then been wary of opening its dairy sector, even for these super premium categories or niche categories?
So, first of all, if you are talking about super premium or niche, then you define it well. Otherwise, you keep a lot of scope for loopholes, opportunity of misuse. India is basically protecting the dairy segment because it is livelihood for 80 million families. Now we may question that what have we done till now? Why have we not become competitive, etc.? That may be for another day. But today we are protecting lives of people over consumer choice. Now the question is why super premium protection is needed, which India is not making anyways, or let's say whey protein ingredients India is importing, and we know that. Why? Because there were no Indian manufacturers. Today, there are a few Indian manufacturers in Maharashtra. I say a couple of, say Sonai is one. So there is a lot of whey ingredients happening now, but we are importing. It is not that we are not. So I see it as a good communication strategy also to say that yes, now I am opening it up for this segment, the niche segment. I will not allow you to touch the masses, and maybe I will take some tariff reduction overall.
Right. So, how do you see Indian producers now or in general entering or expanding into this premium stroke super premium category of dairy products, not just cheese?
See, once this opens up, this could open up to an extent of 1%, 2%, or 5%. I see a technology transfer happening. I see investments in cold chain happening. I see consumer preference, consumer evolution happening. So, all of these will lead to a competitiveness with the Indian manufacturers, however small in number they are. Okay. But at the same time, the risk is let's say one producer in Satara is manufacturing artisanal cheese, and that one manufacturer is not just a statistic, it's not a percentage. He is a manufacturer and he will be impacted by this. He will not be protected by this decision. He will be impacted. So, only way that he or she will have is to improve. And at the same time, I'm sure once the government opens this up, there will be support in terms of infrastructure enhancement, in terms of marketing, in terms of technology transfer. If you see, even the multinational dairy companies who are in India today haven't done too much on technology transfer. They have only been doing more of the same thing or sometimes less of the same thing. So now with this, there might be some incentive for people to bring in some technology to improve value addition, which will help our Indian manufacturers.
Right. Last question. So we did say in the beginning, or rather, you said that the US is not interested in the mass market. Why is that? It's not interested because the economics of, let's say, delivering milk over long distances don't work, or is it some other reason? Assuming the market was there or opened up.
If the market was opened up, they could try, but milk doesn't travel that much. Fresh milk will not travel. Even if I am producing in Pune or Mumbai, I don't send fresh milk to Calcutta. I don't send fresh milk to Chennai, let alone US. So that is one. And then I still believe that there is a need to ring fence the 80 million families who are engaged with the industry for some time till we become more competitive, which we will be with this kind of phased liberalization model. I see this as a very welcome step.
Right. Rajiv, been a pleasure speaking with you. Thank you so much for joining me.
My pleasure, Govind. Thanks always.
Enterprise AI. Late last week, I had the opportunity to chair a panel discussion on artificial intelligence and agentic AI with several business leaders. The backdrop was season 9 of the Accenture B School Challenge, where some 3,000 teams and 12,000 participants from India's leading B schools competed to reimagine enterprise processes using agentic AI. In my conversations with leaders, several insights came up, and let me take you through some of the key responses to my questions. I started off by speaking with Gunjan Shah of footwear major Bata India on the theme of hyper-personalization that Bata is aiming for using AI.
Not only agentic, but also the previous version of generative and predictive, right? So I think that itself unlocks a lot of stuff. And then if, let's say, if, in any other case, if the team is given enough freedom and empowerment, then obviously, solutions emerge, business impact and use cases emerge, and therefore then the investments flow behind it. From a hyper personalization point of view, I think there are multiple cases, and that's been, I think, under the journey for, I would say, at least 3 to 5 years now. Right. So one is basically outreach to consumers, right? Now with the digital mediums available in various ways, you are able to target consumers directly, right? In clusters as well as literally 1:1, right? So, targeting Govind himself, right? So that's, I think, one big piece, whether it's in communication platforms on social media or whether it's in, individual platforms like WhatsApp or SMS and emails, etc., right? So how do we segment consumers? What is your preferences and choices? What's your history with us, engagement? And therefore, what is it that we can customize as offers and, whatever communications to you? The second big piece that's there is almost about 5,000 to about 10,000 consumers reach out to us every day, right? For various reasons. The point is, how can we make sure that we give them a seamless experience which is unified all across, right? So they interact with us on multiple platforms, whether it's on online platforms, in our stores, going back histories, multiple banners, as well as in marketplaces, right? So how can we make sure that the person who is being reached out to in our from our customer service point of view, how can that person have a unified understanding of what Govind is looking for, and therefore what is his history, and therefore provide a customized solution? The last piece that is there is basically, I would say, in terms of even designing, but that's still, I would say, a work in progress, I would say.
I then asked Nilesh Shah, head of Carlsberg in India, the beer company, about how they were seeing AI and its applications.
So in alcohol industry, it's like any consumer goods industry, right? So what we have done, and we're just embarking on this. Our consumer industry is quite complex. So we have decided that we will focus on the front end, which is to really use technology and AI to really understand our consumers, what motivates them to buy goods, etc. What motivates them then eventually to choose beer? What then motivates them to then choose the brands? And then what then motivates them to go and buy again and again the same brand? So one part is the understanding the consumer part. The second part is really all the customer engagement. So customers have technology, we have technology. We want to become not just a seller of product, we want to be a partner in this. And the way we want to do it is use AI and technology to integrate automatic replenishment, understand the consumers who go to restaurants and bars, what they order, and therefore provide them all the information regarding our beers. Carlsberg is a 200-year-old company. We've got a lot of history. We've got a lot of heritage from Denmark, which we can share with consumers so that they choose their preferred beer. So we want to use, that's a third area. The third area is supply chain. In supply chain, our biggest challenge is India is a vast country. Alcohol is a state-by-state subject. It's quite volatile, is to get the demand and supply right. So for example, you can take history of what has happened in a state in terms of demand, input all the necessary consumer data, customer data, and then look at history and do some prediction of what could be going forward. And based on that, we can make predictions and keep using it so that it gets better and better all the time. The fourth and the final part is around sustainability. So our passion is water. Before we even use AI, there are many things we can do to fix water issue by reducing, reusing, recycling, and replenishment. But once you have done all of that and you save, so in Carlsberg, we were spending, we were using 4 liters of water to make 1 liter of beer. Today, just by doing the basics, we're using 2 liters of water to make 1 liter of beer. Significant reduction. We want to get down to below 2, and that's where AI can come in. You can put sensors where the leakages happen, look at history of where most leakages will happen, and then be proactive. Before the leak starts, you go and get that washer changed or get that joint repaired, and so on and so forth. So these are some of the basic things that we can start looking at. And I think the final part is that you must get your foundation right, which is the data. Today, you look at multinational companies, they've got data on Excel, they've got data on ERP machines, systems, they've got data in many other places. We need to consolidate all that data in one place, and this is a very big job and big opportunity for young people, and then clean up that data and then use that data to do predictive analysis and things like that, so then give you what future.
Next up was Jyotsna Sharma, CFO and head of IT for Bridgestone Tyres, and how she was seeing AI at the factory floor out of Pune.
So how do you train human behavior? with the use of technology for their own good is what is one of the case which I learned in the recent, and I thought it's such a good way to see how we could fund to have more safe workplace and build in the culture of ethics amongst the shop floor people. Another example I would like to give here quickly is, if you know the past, since I belong to the finance function primarily, having a 35 years of experience over, and I've seen every era, right from the telematic machine where you used to key in the numbers till today, where you talk about AI and the data gets analyzed. Now, there is one simple thing, and you all must have all known the case of Metas or Satyam, where how bank balance confirmations were not got timely and how it led to such a big scam. Now, this is a very common thing that every auditor, the best of auditors, Big Fours, send an account confirmation statement to our dealers, customers to get the confirmation of the balances that the sales have happened. Now, 99% times you never get back the confirmation. That's my experience in 30 years. Now, just imagine we have progressed. Now we have automated confirmations going. There are tools which say that, yes, this is the balance with us. But what if there were multiple APIs generated whereby on a daily basis an outstanding mail is triggered through the ERPs or through other systems that you're using, and it goes to impact their CIBIL rating in that case. Now, all of this would lead to such a high level of governance and monitoring. So these are small use cases. Beyond what we see, a lot more possibility of analytics. So moving from the legacy approach towards working, towards a more liberal way of working, because liberating yourself by doing these repetitive tasks which don't add value, but to focus on the outcomes is what future is going to be towards. So I see a huge shift going to be happening in every industry, and particularly in the world of finance, whereby the use cases are more going to be driving decisions out of the outcomes. It's going to be more autonomous, and we will see a lot more coming up with the use cases in future.
And Sandhya Shekhar, who sits on the board of several auto companies in India, from her perspective, and also an interesting case study of a medical application.
So that has to be essentially the starting point. And even in the automotive sector, we are seeing companies attempting to identify which are the areas where we're already geared up to be able to introduce AI in a way that the potential benefits exceed the flip side of introducing it and causing fundamental changes within the organization. And that's why, especially for youngsters like all of you, there is a huge big opportunity because you're not straddled with what already exists. Let me give you a specific example, for instance. In our own Indian innovation ecosystem, we have a company called Vyuha MedData. You know, what it does is it's into cervical cancer screening. So it takes these slide samples for liquid cytology, converts it into digital assets. And AI is used to detect cell anomalies so that the detection rate and the validity of the diagnosis is much, much higher than what used to be done earlier. Imagine the huge value proposition to the customer. You know, what used to be reliant on manual mechanisms, despite good technology in terms of microscopes and others, is now actually left to carefully designed AI algorithms to be able to detect anomalies at a very, very early stage. You know, so this is really huge. And here we have a case where you're building a whole organization around a possibility that is created around AI. Okay, so that's one way to go.
And Norbert Fernandes, a venture fund investor, on how he spots opportunities in the AI space and also what he's careful about.
You know, as an investor, there are a couple of ways to look at it. One is, of course, how does it impact me running my own firm? So today, already, we are able to stitch together a bunch of off-the-shelf AI tools to make our own decision process much leaner and, you know, effectively get to a 90-95% accuracy answer or output level of, you know, a 2 to 3 member investment analyst team. That's like a direct impact on how we work. But more importantly, how does AI impact how we think about the companies of the future that will create value? Here, I think we think along two tracks here. One is companies that are using AI for specific efficiency gains within existing workflows. Um, and there's an art to doing that also. It's not easy, but doing that, and I think several examples have been raised here already, will create value. There's no question about it. But there's a second type of company that we're also very focused on are, whenever there's a large fundamental transformational technology that, becomes very real in terms of capability, new business models get unlocked. Fundamentally new business models. Think of like an Amazon when internet came. It was a business model that was not possible before the internet. Or an Uber before mobile technology came. Again, a business model that was just not possible before that. So what kind of business model gets unlocked with AI now? It's hard to imagine today. It's almost like something sitting at the intersection of art and technology. What is that business model of the future, which today we cannot think of? We're keenly looking at that kind of activity, and all of that, a lot of that stuff is coming from folks like y'all, youngsters sitting out there who don't have the baggage that we do in terms of technology, in terms of business models.
And finally, Lakshmi Chandrasekharan, the Chief Human Resource Officer or CHRO of Accenture in India, and how she's helping build the talent pipeline that will drive all these AI efforts in Accenture and in turn for other companies.
If I was to kind of build on Nilesh's example of supply chain and kind of translate into an example, say, from within Accenture, for us, our biggest supply is talent, right? If I look at the supply chain model and say internally talent supply, how do I ensure not just my demand is connected in a way to the supply, knowing what the skills are of the people? Earlier, it was easy because I could just match supply to demand and I'm done, right? Staffing decisions get taken that way. With agentic, what I'm able to now do, my autonomous agents are able to I talk to people, understand what their aspirations are, help them understand what training they need to pick up to get staffed onto that aspirational job, connect them to those resources, feed that back into their resume because then they are seen as ready to take on this job, then match the supply to the demand. So it's a big shift. It's no longer just efficiency shift. It's an experience shift. It's acting as a career counselor almost. So I look at all of these paradigms. We also have, I'm a little more optimistic than you, Norbert, about the leverage of technology because I think people absolutely, and I love that quote that you talked about, people have to think about not what AI is going to do to them, but what AI is going to do for them, and how can I leverage technology to augment my own creativity. So the big shift, number one, is for people to learn to work with technology. You're going to have autonomous agents directing not just other agents, but other humans as well in the future as they get baked into the workflow. So how do you work collaboratively with humans and technology is going to be one big shift, which leads me to what organizations are not doing enough of today, which is investing in the human capital. 7 out of 10 organizations and CEOs that we speak about are investing significantly in technology, but not enough in their people. Skilling people, and this is very different technology from in the past where you could just train your technology department on the technology and be done. AI is so much more pervasive. You need to invest in ensuring there's AI literacy across 100% of our organization. And that's the journey we've been on with, more than 70,000 of our people are AI fundamental trained. More than 50,000 of our professionals in Accenture globally are experts in AI. But that is a critical investment, not just in a particular department, but across the breadth of the organization.
And your target would be 350,000 people in India?
I'm talking about 780,000 people globally. So that would be the target audience that we're looking at. Because everybody, ours is not a India only. We kind of pull in talent from across different countries. So that's number one, which is how do you make sure 100% of your organization is AI conversant, literate, and then you have deep technologist specialists as well.
That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.